There you have tuned into Buy Now, Sell Now on ET Now. Very good morning to all of our viewers. I'm Shrishti Sharma and with me is back again Cheryl D'Souza. And Cheryl, the color that you're wearing is market is definitely flipped and rather retraced back into that territory. So not a good sign, but nevertheless we are hoping for a recovery. Let's see that it does come into effect or not. But yes, Cheryl is back. So Cheryl, take us through what is happening in the markets because for now the broad markets are yet again supportive.
Absolutely. Good to be back. Good morning to you, Shrishti. And yes, like you said, the markets are in the negative territory, but making a good solid comeback. In fact, the solid comeback is already being registered in the markets, as you can see it on your screen right now. We are trading at a flat with a negative bias for the Nifty now in the positive territory. You have Nifty Bank, Sensex that are still in the negative territory. But if you talk about the rest of the market picture, yes, the subdued move coming in, but the advanced decline ratio still tilted in the favor of the gainers. So a good respite in that particular front. Hopefully we will see a stronger comeback actually for the markets. Talking about the stocks that are in focus, Cipla is one of the counters that is the top gainer on the Nifty, about approximately 4.8% uptick coming in for Cipla. This, remember that the block deal took place, about 2.52% stake. The promoter or rather founder group members actually offloaded that 2.52% stake in the company for the cash needs as well as for philanthropy. So that's one of the reasons why Cipla is in focus today. You have Coal India, Adani Enterprises, NTPC, Dr. Reddy's among the other set of counters that are buzzing in trade. But on the flip side, it is Eicher Motors that's very subdued in trade today. 1.5% downtick coming in for Eicher Motors. Bajaj Auto also taking it a bit easy. You have JSW Steel, Britannia, Sun Pharma among the other set of losers. What's the picture for the broader markets? Let's take a look at what mid-cap and the small-cap index are doing. And if that side of the markets are holding on to shades of green or no, and there you go, in fact, firmly in the positive territory. That's your mid-cap index as well as your small-cap index, both of them holding on to good gains, making a recovery after a slight bit of dip. But you also have PSU Bank Index as the top sectoral gainer. You have Realty, you have Energy, as well as metals holding on to good gains. And yes, Auto Index taking it a bit easy. So that's the way how the markets are panning out at this point in time. Recovery, a steady one that is underway, Shrishti.
Well, yes, good recovery from the day's lowest point indeed, but a couple of counters are definitely making it big in today's trading session, and definitely stocks like Siemens, Thermax, ABB are doing pretty well in today's trading session. So onto the buy now, sell now lens, we're going to be focusing on that itself, that why these counters are buzzing in trade today and why is these counter excited all of a sudden. So let's understand that what are the dynamics that are at play, because in the past 6 months or so, all these major counters and the leaders in the sectors have almost doubled right now. So let's go across to my colleague Anisha, who is standing by with more details. Anisha? All right, we will connect with Anisha in a short while from now, but before we go to Anisha, let's hear out from the management itself. Siemens MD and CEO Sunil Mathur expects growth to improve as the government and private capex picks up. He also shares his outlook on the margins and the shareholding structure of Siemens Energy. Let's go across and listen into him.
Growth rate of Siemens Limited is known to you. We've been growing at a very good growth rate over the last 4 or 5 years. And we expect that growth rate to improve in the years ahead as the government continues on its path of capex spending in infrastructure and as private sector investments start kicking in. At some point in time, Siemens AG has already announced their intention that Siemens Energy will take over majority shareholding in the new company. Beyond that, we have no idea what the ultimate plans of the promoter companies are. The margins have increased on various accounts, and we've mentioned that also. Part of it is our volumes have gone up, and with the volumes going up, there is definitely an impact, a volume impact appearing in the margins there. In addition to that, there have been cost control measures that the company has gone into, has carried out, as also other productivity measures in our factories and other areas. In addition, we've had some special earnings because of sale of some property and some dividend that we received. So overall, our intent is to continue to grow the margins.
So that is the MD and CEO of Siemens talking about the way forward going in for the company, especially for Siemens Energy. But Anisha is here now to exactly tell us how are the numbers for Siemens. And in fact, Anisha, if you look at it, the stock is not only moving on back of the earnings, but also it is moving not only on earnings, I believe, and also it is moving on the announcements that the management has made, isn't it? And also you have ABB. After ABB's earnings, also you saw Siemens run up. So if you could tell us what exactly is happening in the space, what are the commentaries coming in from the management?
Just to the tune of the highest that we have seen in the last 7 years. And that is happening because the order visibility is quite strong. They talked about the entire power transmission sector, which is likely to see an uptick, and that's why they're increasing the capacity in the switchgear and substation segments. There's also other activity which is expected to pick up, which is from the railways vertical, and Siemens has been getting in large amount of orders from that as well. So that is clearly reflecting in the numbers. Well, the top line itself was a beat, but there was a bigger beat on the margin front, and that percolated to the bottom line as well. And the order visibility, as I talked about, is also very strong. The other big news flow that happened was, of course, the demerger. Remember, earlier the company had tried to sell off a part of the business to the parent company. That was shot down by the minority shareholders. Now they've come up with a better plan, which seems like a win-win for all. So they are doing a mirror demerger, which means that the shareholding of the demerger entity will be pretty much same to the current entity, and everybody will get to participate in the value creation. And also ultimately it seems like that the parent wants to hold in a majority stake in the separately listed arm. So that's the other thing to watch out for. But overall, it's a good news coming in, thumbs up coming in from brokerages as well, because the likes of Jefferies has upgraded target price over 8,000 bucks now versus 5,000, 6,000 that they had earlier. And the entire sector is clearly in favor. Very strong commentary that came by from ABB. Thermax was a bit softer when it comes to the performance, but the visibility there was also strong. And when you look at L&T's number as well, they had talked about a good growth of almost 10% on their order inflow, and that came on a jump of 20% in the year gone by. So clearly, the orders are galore. It's now all about execution for these guys.
Orders galore for these capital goods majors, especially for Siemens. And yes, execution definitely is the key when it comes to huge order win. Thank you so much for that, Anisha. And let me bring on board our guest for today. We have Kush Bohra, who's joining us on the technicals, while on the fundamentals. Today we have Shahina Mukadam joining us. A very good morning to you, Kush, as well as Shahina. Thank you so much for joining us on the show. And Shahina, let me come first to you. Siemens, definitely good set of numbers, good strong commentary coming in from the management, and that's actually made the stock actually see a sharp run up of about 9% or so on an intraday basis. And also ABB, after ABB earnings as well, you saw the counter move up. So what do you make of the earnings and the commentary coming in from Siemens, and also the corporate action that is coming in for the counter?
Actually, if you see, the whole sector has come out with very strong numbers. We saw Thermax also, including in the other two that you mentioned, Siemens and ABB. The numbers are coming out extremely, very, very strong numbers. Here also, as we saw in Siemens, the top line growth was about 18-19%. And with order book close to about 20,000 crores, I think going forward also, the growth is likely to be pretty strong. Also, as you mentioned, as the analyst mentioned, you had a very big improvement in overall EBITDA margins. And EBITDA margins definitely are benefited because of lower raw material costs, better revenue growth. And I think this is likely to continue going forward, given the fact that they are continue to invest in their own capacity. They're adding capacity. Capex is going to be around 520 odd crores over the next year or next 2 years. They will be benefiting from that in the overall growth going forward. Also, as you mentioned, that the demerger of the electrical business will happen, and that is like I would say a value unlock for shareholders. At the same time, what I would say, what I believe is that the stock price has rallied, in my view, a bit ahead of valuations. So if you look at pure valuations, it's about now at current valuations, you see it's about 10 times the turnover, current turnover. So what I feel is that it is pretty expensive, even on PE basis, on all parameters actually. So I would prefer, if you're holding, continue to hold, of course, because it's a very strong fundamental stock. Hold with a stop deep, stop loss, maybe closer to 6,000. But if you're not and you're looking to buy, in my view, it's better to buy it at declines.
All right, the stocks are doing pretty well, but that's the call coming in from Shahina that you can enter these counters but on declines. But Kush, talk to us, how do you track these counters on the technical front? Because like we can see that in the past 6 months, the stocks like Siemens, ABB India have almost doubled. Do you believe that given the strong run up and no stopping for these counters, there's still room for more upside?
Hi, Srishti. A very good morning to you. Hi, Shaina. And Cheryl, good to have you back on the show. You're looking exhausted and energized at the same time. I know must have been some trip. As far as Siemens goes, look, the stocks actually run up quite a bit. We all know that. And what's interesting for me is that not only on the daily charts, but even on the weekly charts, it is in the, in far, overbought territories. So I agree, with China completely that you should hold this stock if you've got in your portfolio. But any fresh buying should be initiated somewhere close to 6,500 and 6,300 kind of zones, where the stock will perhaps cool off a little. And I wouldn't be surprised that in the coming times or in the coming months, the stock might perhaps see a dip, if for no other reason, perhaps just because it's gone into a far overheated territory. So for me, this is definitely a buy. And as you rightly said, Steve, not just this stock, particularly a couple of other colleagues, also of this stock, or rather, some of the other counterparts also. But it's a buy on dips from here on, far, higher up into the overbought territories. So wait for some cooler for a fresh entry.
Right, so that's the take coming in on Siemens from Kush as well. And yes, Kush, definitely it was an exhausting holiday, I must say. And what's even more exhausting is when you return back from that good long break. And it was not that long, it was only 5 working days. It's just only 5 working days, so not that long as it. But yes, I must say you are looking pretty well rested after your break as well, isn't it, Kush?
We were perhaps in the same territory, so yeah, you know.
We got to know that.
Yes, absolutely. Shahina must be wondering when will ET Now guys let me take a break, isn't it, Shahina?
Next week.
Okay, fine. I will let
a long weekend that is coming.
That's the right one, actually, right time to take one. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we start taking your query. Viewers, don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, show where we get you answers for all of your stock related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you've already bought the stock, then mention the buy price, the quantity, as well as the time horizon. In that way, our experts will be able to help you better. And talking about our experts today, we have Shahina Mukadam who joining us on the fundamentals, while on the technicals we have Kush Bohra. And let's get started with all the queries that are pouring in. And this one is coming in from Subramanian, who's writing to us from Thane. He has 140 shares of Aptech at a price of 378 rupees per share. He's holding this stock for a loss, and it's been over 6 months now. So he wants to know whether he should continue to hold on to it or look to exit from this stock. What should our viewer do in Aptech actually, Kush? What's your take coming in on this one? How are the charts looking? Any scope for a bounce back?
Well, there are green shoots. If I look at it from a weekly setup, then it's taking the 200-week support. But I'm not sure if the bounce is entirely reliable, because you've got multiple resistance points, within that 235 to 240 zone. Now there is also a gap close to 255. So there's a possibility that in the rebound there is an up move up until 255. But the buying price is fairly high. So my suggestion would be to hold this with a tight trailing stop loss of 205. If that is broken out, broken, then exit. If not, on the upside, you can get an opportunity perhaps to exit close to the 255 level. Not entirely sure if the buying price is going to come anytime soon.
All right, that's the take coming in on Aptic. But moving on then, and Shahina, the next query is coming in from Satya, and he wants to know, is this the right time to buy Castrol with a 1 to 2 year investment horizon?
Yeah, Castrol is a portfolio stock, and you can buy it and hold it for a 1 to 2 year holding period. I think you should make decent amount of money.
All right, this next one is coming in from Yuvraj, who's writing to us from Chennai, and he wants to know if it's a good time to start accumulating GE Shipping as well as Titagarh Wagon for the long term right now. What's your take coming in on those counters in particular, Shahina, both GE Shipping as well as Titagarh Wagon, because both of them have seen their fair share of rally, isn't it?
Both of them look good. I think G shipping definitely looks good because you have rates going up, so that looks good. And Titagar wagons, of course, with the budget coming up in the near term, and of course, the overall demand from railways is pretty strong. They've added capacity, so it's a hold for both.
All right, moving on then, and then next query that I have, Kush, is coming in from Shashila, and she wants to know, can she go ahead and buy Canara Bank shares at current market price, and any target price to highlight as well?
Oh, absolutely. The stock's seen a fair degree of decline. There's a strong support zone coming in around the 110 level. So not a bad idea to start accumulating, assuming a 3 to 6 month kind of a horizon. Then this might turn out to be a good buying opportunity. So buy with a stop loss of 110. On the upside, you're looking at 130 and even a 140 as the target from a 3 to let's say a 6 month time horizon. The current consolidation in the banking stocks, actually, from my perspective, is a buying opportunity. Canara Bank from the PSU pack will top the list, right after SBI.
All right, this one is coming from Murli, and this one is for you, particularly Shahina. He wants to know about Aurionpro because at current market price, he wants to know whether he can continue to or look to buy the stock, given the fact the management is confident of over 30% growth or so, and also they've announced a 1:1 bonus share issue. So he wants to know on fundamentals, does it make sense to enter this stock?
You're talking about Orient Power. What is it like exactly? I didn't get this stock.
Aurionpro Solutions, the one that reported his numbers yesterday. I will request my producer if you can show the stock price for Aurionpro. Maybe then you will guess the stock.
Wait, I'll pass it. I'll pass
All
this.
right, fine. Kush, have you checked this one on the charts by any chance, Aurionpro?
So Cheryl, even I'm not able to locate the stock. Must be some confusion with the name from the investor side. If you could reconfirm that, we go circle back.
All right, let me circle back on this query in a short while then. This one is coming in from Sunita, who's writing from Bangalore, and she wants to know about Lakshmi Machine Works, 5 shares at a price of 17,500, and Piramal Enterprises at a price of around 900 rupees per share. She wants to know whether at what level should she look to exit from both of these counters or continue to hold on to them. What's your take on these two, Kush?
Lakshmi Machine Works is a hold. You could continue to hold on the stocks. Actually, not a trader counter. It's more of an investor counter. Has been delivering, generating wealth year on year. So from my perspective, if money is really not an urgency, not a bad idea to continue to hold on. Perhaps 19,500, 20,000 is the next target that you can look for from 12 to 18 month horizon. PEL, on the other hand, has consolidated, hasn't really delivered. All promises recently haven't really been fulfilled. My suggestion is that you can switch from a Piramal Enterprises, but Lakshmi Machine Works continue to hold.
Go back to that query, and I'll ask my producer to fire the stock name Aurionpro over there, Solutions. Shahina, if you can see the screen, if you track this counter by any chance?
Yeah, it's a hold. It's done pretty well actually. And in terms of, I think returns also, you should expect decent returns. Of course, the stock has given you a very sharp up move in the last couple of months. But I would say that, the results also were out and were pretty decent, as you mentioned yesterday. But it would be a hold.
Somebody wants to enter afresh. Do you think these levels are attractive enough? Right now, you can go ahead and buy the stock, given the management is sounding confident of the earnings going ahead?
It would be better because the stock has rallied a lot in the last couple of months. It would be better if I would suggest if he buys it closer to about the 2,300 type of levels, not to buy it, when the stock has rallied such a lot in the last couple of weeks.
All right, moving on then. And the next query that I have, Kush, is coming from Mumita from Kolkata. And I guess she's writing to us for the first time. And she wants an advice on Havells. She has bought 40 shares and a buy price is 1,152 rupees. And it's been 3 years that she is holding the stock of Havells. Is this a good time to book out profits now, given the run up in the recent past, or will that be a hold?
Well, again, if money is really not a constraint or a requirement, there isn't anything, on the charts suggesting that, the stocks are topping out or anything. It's seen a sharp run up. The volumes in the last couple of days have been declining gradually, but that's understandable after a big sharp up move. On the whole, my suggestion is, if you're a long-term investor, continue to hold. The stock is ripe for a move to, 1900 and 2050 kind of levels from a 12 to 18 month kind of a time horizon. A positional stop here comes in at 1650. So if you want to exit, at a dip, then perhaps 1650 is the level to watch for. But on the whole, I think the setups, fairly encouraging. You look at across multiple time frames. So for an eventual target of, 2050 from a 12 to 18 month time horizon, you should continue to hold Havells.
All right, this one is coming in from Siddharth, writing to us from Kolkata. He has 21 shares of SBI cards, about 84 shares of Nykaa. Both of these counters he's been holding since the IPO. Now he wants to know what's the outlook for both of them. Should he look to switch to other counters altogether? What's your take coming in on both of these counters in particular, Shahina, for Nykaa as well as SBI card? Do you think it makes sense for a viewer to stay put with these counters, given the fact that he's held on to it? So he looks like a long-term investor.
If for a long-term investor, I would suggest a switch from both of them. From SBI cards, I would think that SBI Bank itself will give you a better return. So it is better to switch. And as far as Nykaa goes, of course, numbers are improving, but valuations remain very high. So if you want to invest a high value, similar type of platform stock, I would still prefer Zomato over Nykaa. So it is a switch from both.
All right, Shahina, the next query is from RK, and he's sitting at a loss in Bank of India. What to do in this one? Because in the past 1 week or so, just after the earnings, we have seen the stock got hammered. So what's the outlook on Bank of India for a long-term investor? Can he continue to hold on? And also, he wants an advice on JSPL. His time frame for the fresh investment is for the next 2 years. Is this a good time to buy JSPL?
Coming to Bank of India, the numbers were a bit disappointing. Well, of course, all banks' balance sheet is improving, but they are going to face certain additional provisioning norms. So here also, I would suggest a switch. I would suggest a switch to maybe a private sector bank, like you could go for a HDFC Bank or even something like we discussed SBI also. So it would be a switch. In terms of the other stock you mentioned was.
The other stock was JSPL.
JSPL, yeah. JSPL is a hold currently. They are doing pretty well, and I think in terms of demand, also power sector is likely to do well. So it's a hold on JSPL.
He wants an advice for a fresh investment for the next 2 years. Like, can he enter fresh in this?
In JSPL, yes, he can. He can invest. He can go in and invest even at current levels. I think it would give you a decent return if you're holding for a year or two, because I think all across metals is also doing well. You have power doing well, so numbers will look better going forward.
Right, so that's the take coming in on JSPL. If you're buying a fresh, then definitely go ahead. And if you already have it, hold on to it, is what Shahina is saying. But we'll slip into a break. When we come back, continue to taking your queries. Don't go anywhere.
Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. And the next query that I have, Kush, is coming in on yet again a banking name, that is Union Bank. Manash from Guwahati, he's writing to us for the first time, is holding 100 shares of Union Bank from a price of 156 rupees. He bought these shares 2 months back. Is that a hold or sell at this point in time?
Well, it's a hold. However, I wouldn't recommend adding more, and not just because of my views on averaging. It's just that the stock is not really found its feet yet. We've seen some sort of a recovery in the last couple of days, perhaps a bit even today. But I'm not sure if the stock's completely, out of the woods yet. So 132 is a strong stop, but from a 3 to 6 month kind of an horizon, my suggestion would be to hold. There's a good possibility that he could perhaps see his buying price come along, maybe even a marginal profit.
Okay, this next query is coming in from a viewer who wants a technical view on Biocon. That is another Yuvraj who's writing to us from Bangalore this time, and he wants to know that is the stock making a turnaround on the charts, and is it is it in for a fresh buy? Kunal this morning was positive on Biocon. Are you as well, Kush?
Well, the story with Biocon is that once bitten, twice shy. There have been instances when the stock's actually shown, a lot of promise but hasn't delivered. Hence, there is always a certain caution, in the stock moving higher. That said, if I just look at it purely from the current move that we've seen, let's say from mid-March, where the stock made that bottom and is recovering, then yes, the stock does seem to be turning a corner. There is a near-term resistance at 325 for the 200-day moving average, which is also the supply zone, by the way. So just be a little cautious around that level. My view is once that 325, 330 zone is taken out, is when the stock could see a higher momentum that could in fact take the stock to something as high as 390. So the stock does seem to be turning a corner. If I were to invest in this, I would start with a small quantity and add more, as and when it moves higher past 330.
Right, moving on then, and Shahina, and the next query is coming from Sunny, and he has shortlisted 4 counters and wants your advice that out of these 4, where he can go and make a fresh investment for the next 12 months or so. He has stocks like Kalyan Jewelers, Grasim, HDFC Bank, as well as ITC in mind. So, any stock that you like out of these 4?
Oh, that's difficult choice. I think all 4 are decent stocks. Kalyan Jewelers does seem to be doing well because gold prices are going up and demand remains strong. ITC also, of course, is an all-time favorite, and yeah, it seems to be again moving up because rural demand is coming back and they are doing pretty well. So HDFC Bank is an all-time favorite. So I think you can take your pick. All three or 4 of them are interesting. So you can, of course. 2 of them are very large caps like HDFC and ITC. So you can pick up one of the 2. I think both are equally good, and you can pick up Kalyan Jewelers. I think you can make a portfolio of 2 with the very large caps, one of the 2, and maybe Kalyan Jewelers.
Another one coming your way, actually, Shahina. This one is coming in from Malli, who's writing to us from Hyderabad, and he wants to invest about 5 lakhs. And he's shortlisted 4 companies that he's looking to buy. He wants to know, is it advisable to buy those 4 counters? And in fact, all those 4 counters are in the similar space itself. One is Inox Wind, the other is KPI Green Energy, Websol Energy, as well as Vare Renewables. If you look at these counters, all of them have had their fair share of run as well. If not all, at least most of them. What's your take? Do you think it's the right price, it's the right investment to do right now for the longer term in all of these 4 counters, or look at some other sectors or diversify rather?
Well, see, I personally hold Inox Wind, and so I would think that the bonus issue is there. The ex date will be, I think, over the next week or so. So if one really is looking to invest and do some tax planning using bonus, I think Inox Wind is an interesting stock. It's also a turnaround stock in terms of moving from losses to profits. It's a slow move, but it looks interesting. Among the other stocks, see, the whole sector is very expensive. So if you want to invest into the sector, then you have to, build a portfolio, using like a lot of them, like maybe you mentioned some of the other stocks. You can add, but I think valuations are extremely expensive. So you should wait for declines and then or some specific corporate action and then invest in them.
All right, moving on then, and Kush, coming to you for the next query. This one is coming in on Hindustan Oil Exploration. Mitu from Pune has bought 500 shares and her buy price is 190 rupees. He wants a technical view on this particular counter and any targets to look out for in the short term.
Well, I think the stock could perhaps remain under pressure for some time. We're seeing a mild negative divergence on the charts on this one. So just be a little cautious. That's what my suggestion would be. From a support zone perspective, 180 seems to be a strong support for the stock. So put that down as your stop loss. If the move is negated and the stock does move higher from here, then I think we're looking at a 205 and a 215 as the near term target. So could remain under a bit of a pressure. Be watchful, and 180 is the stop to watch for.
All right. Let me take this next one, which is coming in from. Okay, this one is coming from Mahalakshmi, is writing to us from Hyderabad, and she wants to know about Bharat Bijli, about 50 shares at a price of 3,370 rupees per share. She wants to know whether she can add some more for the long term, and her long term is pretty defined, 12 to 18 months. What's your take on this one, Shahina? What should she do with Bharat Bijli? Do you track this one closely?
No, I'll pass this.
All right. On the charts, then, Kush, if you can take a look at Bharat Bijli and tell us what she can do, what sort of strategy should she adopt when it comes to this counter?
Pretty encouraging move, I would say. After a sharp run up and a brief round of profit booking, the stock's actually now turning a corner and it's moving higher. You will have 34.75 the near term high as perhaps one of the levels to watch for, but I don't think that will act as a very strong resistance zone given the kind of up moves that the stock tends to see. The momentum indicator is also pointing north, so my suggestion, continue to hold on. I'm glad that she's got a very defined time horizon of 12 to 18 months. A good possibility that the stock could head to 36.50, and if that is taken out, 3800 is also on the cards. So continue to hold Bharat Bijli. Wouldn't recommend adding more because there was a dip and that's already been bought into. But for an eventual target of 3800 and a stop of 3200, continue to hold Bharat Bijli.
Right, then moving on, and the next query that I have is on from Mr. Singh and Shahina. He wants a fundamental long-term view on 3M India, I guess, and he wants a 3 to 5 years view on this particular counter.
3M India is like, of course, as you know, it's got very innovative products. And it is a strong brand, but at the same time, in terms of stock performance, I think it is better not to be invested in this stock and to exit, given the fact that the numbers have been pretty disappointing over the last quarter also, and not expected to really give you a strong performance even in the near term. So one would exit.
All right. This one is coming in from Shaurya, who's writing to us from Gurgaon, and he has 50 shares of Latent View at a price of 600 rupees per share. Should he hold or look to exit this counter? But he has a long-term view, and also DLF, good buy right now. What's your take on these both of these counters, Shahina? One is Latent View. The viewer has already purchased the stock at around 600, and the other one he's looking to enter, that is DLF.
Well, I think both these stocks, are expensive. Have a Latent View actually from time of listing is not really giving you a decent return. But that these are stocks that are concept stocks in terms of Latent View. So one can look, if you want to buy, better buy it at dips, not to buy it at current levels. In terms of DLF, real estate sector is likely to do well for the longer term. The stock has performed. So I think both the stocks you can buy and hold for long term, but please buy it at lower levels, not at current levels.
All right, the next query that I have, Kush, once again, this one is on Canara Bank. This is from Achar from Madurai, and I guess he's writing to us for the first time. Is this a good time to buy Canara Bank? And he's looking to invest 4 lakh rupees today because of the split, and he's looking for an upswing for the next 1 to 2 months. So will that be a good move to go ahead and invest 4 lakhs at Canara Bank this time?
Sure, Shrishi. So a very similar view. I think a 1 to 2 months perhaps could be a slightly shorter time frame, for my comfort. But anywhere from let's say a quarter or two, 3 to 6 months kind of a horizon, Canara Bank, could very well rebound from here. We spoke of 110 as a stop loss in this one. So if you want to enter now, then perhaps 1010, or 110 rather will continue to be your stop loss. And we're looking at a move towards 125, perhaps even a 135, as I said, but in a 3 to 6 month kind of a time horizon.
All right, so that's the view coming in on Canara Bank, but there are a lot of queries yet to be answered. But before that, we'll slip into a break. When we come back, we'll continue taking those queries. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. We're at the last leg of the show, so let's continue taking all of it to stock-related query and try to fit in as many as possible. This one is coming in from our viewer Tanya Bakchi, and Tanya has not mentioned her name. Please do mention your name each time you write to us. Tanya is asking if it's good time to enter Dalmia Bharat at current market price for a period of 6 months now that the stock has seen some sort of a correction. What's your take coming in on Dalmia Bharat in particular, Kush?
Well, again, not sure if the stock's really found its feet. It does become a little tempting when the stock falls quite a bit. But for a fresh buy or for a re-entry, the stock has to show signs of recovery and revival. We've seen a bounce for the last 2, perhaps even 3 sessions, but could well turn out to be a dead cat bounce because even after this fall, even despite the fall, the stock's far from the oversold territory. So could continue to see lower levels. I will wait and watch before I make any kind of fresh allocation.
All right, moving on to the next query, and Shahina, coming to you for this one. This query is coming in from Keyur, and he wants an advice on Bajaj Finance. He has bought 20 shares. Just a second, because okay, so I believe that this is Bajaj Finserv, because he's saying that he has bought 20 shares and his buy price is 1750 rupees. So at this point in time, should he go ahead and rather book loss in Bajaj Finserv and switch to Motilal Oswal or any other stock that you like at this point in time?
Well, he should switch from Bajaj Finance because, of course, it is expensive. And,
Bajaj Finserv. Sorry.
Yeah, Bajaj Finance.
Yeah.
Yeah, I would believe he should switch from here. A lot of new competition is coming into the space, and also it's an expensive stock. So he should switch from here. Having said that, I think it would be better if he switches into some of the banks, maybe as we discussed earlier, some of the private or public sector banks. That, in my view, would be a better switch.
All right. This next one is coming in from Srinath, who's writing to us from Chennai. Kush, for you, IRFC 1000 shares at a price of 155 and Mazagon Dock 200 shares at a price of 2,300 rupees per share for a very short-term target for both of them. And the short-term is just 2 weeks. So what's your target coming in from Mazagon Dock as well as IRFC? And would you advise that only 2 weeks is enough to hold on to these counters?
Well, ideally, no, but then, we've got all sorts of participants in the market, right? And he's perhaps, a trader, even a swing trader at that. So, we, of course, respect that. So from a near-term perspective, we are seeing a bit of a rebound in IRFC, although I'm not entirely sure whether, the resistance levels will be taken out. The near-term resistance comes in at 163, let me round that off to 165. So perhaps a move up until that level is possible. But the stock could see some headwinds, along the way. Mazagon Dock, on the other hand, there's been a sharp rebound. This stock is due for a rally, on the way up. And for perhaps a view of 2 weeks, you could look at a target of 2450 and 2525 if this momentum continues. So some struggle, some headwinds on IRFC. Mazagon Dock might continue to do well.
Kush, once again coming to you, this query is from Milap from Kerala, and this is an FNO query because he has bought a Nifty Bank 48,000 call option for the next weekly expiry, that is of 22nd of May, and his buy price is around 345 rupees. 345 is the buy price. Is that a hold or exit at this point in time?
That's a 48,000 call option for the next expiry, correct? Yeah. Well, I would say continue to hold purely because the view on the bank Nifty from here is mildly bullish. If you see the upward sloping channel for the bank Nifty on a weekly basis, it's on the support line. So there could be a rebound that could be around the corner. Not entirely sure, if they'll be able to turn a profit because of the theta, creeping in. But there's a possibility that the bank Nifty could turn around from here. However, in case that this fizzles out, my suggestion would be to keep a stop loss at 200 or 180 levels for this call option.
All right, with that, let's kickstart with the rapid fire then. This one is coming from Kumar from Mysore. Short-term view on Aster DM, 200 shares at the price of 420 rupees per share. What's your take, Kush?
Exit.
All right, Kush, have to come to you for this. Meenakshi is seeking a view on persistent 3400 call option at a buy price of 142 rupees. Is that a good? Will that be a good move to go ahead with this call option?
Yes, you can have a stop loss at 125.
Shahina, do you think Ashok Leyland is a good buy for the long term? Vijay is asking.
Yeah, it's good for both short term as well as long term in my opinion.
All right, Shahina, what's your view on SW Solar? Neeraj is holding 50 shares and his buy price is 643 rupees. Is that a hold or sell?
SW Solar is a hold.
All right, Imran wants to know what is the right entry level coming in for Zomato, and also what's the short-term target coming in for Zomato, Kush?
Well, I think the current price is also a good level for an entry on Zomato, and the targets that you could look at is 205 for the short term. Also, a stop loss at 180.
All right, Shahina, amongst Jio Financials, Kotak as well as Adani Ports, any stock that you like for a fresh investment right now?
Jio Finance would be a good investment for the medium to longer term.
All right, Subramaniam wants to know about Karnataka Bank. He has 250 shares at a price of 132 rupees per share. Is it worth holding on to or look to book profits? What's your take, Kush?
Well, book profits.
All right, Shahina, what's your view on Global Spirits? Raja Gopalan is holding 140 shares, buy price is 840 rupees. Can he go ahead and average this counter?
Average it at declines. I like the overall space, but not at current level.
All right, Alok Mangla has 10,000 shares of Adani Power purchased at 250 rupees per share 2 years ago. Now he wants to know whether he should continue to hold or sell, but his time frame is 3 to 6 months. But I'll take it to you, Shahina. What's your take coming on Adani Power?
It's a hold.
All right, Kush, what's your view on Vedanta? Reshma Bhatia has been holding the stock from lower levels, but at this point in time, good to book out profits or continue to hold on?
Book partially.
All right, with that we come to the end of the rapid fire, I believe, and not restart of the rapid fire. Thank you so much, Kush, as well as Shahina, for joining us on the show, taking our queries as well as talking about the capital goods sector as a whole. But with that, we are totally out of time on this edition of Buy Now Sell Now. It's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.